Stocks finished higher today, third straight day, but not without a lack of concern or things that could be drawing the market lower. You have the government shutdown at the end of the day today. You got Chicago PMI with numbers below expectations. Consumer confidence was numbers below expectations. So yields kind of fluctuating there because of that, which also is impacting Fed rate cut odds, but not too negatively yet. So we'll break all that down. We'll also take a look at how strong this bullish move has been, how much breadth there is, what volatility is doing in today's preview video. Obviously, a deeper dive in the full video, but that's what we'll take a look at today. So let's go ahead and get started. Today is Tuesday, September 30th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. All right, really quick, before we get going too far, if you click this link up in the top right corner of your screen there, you'll get to our market outlook blog post. This is a free blog post available for all of our free subscribers. And again, it's just kind of a general idea of what happened today, why it matters, what to watch for, what it means. All of that, all for free. Again, including our market outlook preview that you're watching right now at the top of the page. To get here, just go to our website, click under market outlook video. You can click on that link. It will take you to this page where you can join for free. Just click this blue button, join for free, and you can subscribe here. So if you click this link in the top right corner, that takes you to this page where you can join for free right now. And when you do that, like I said, you get access to our full market outlook video, market outlook blog post, as well as the market outlook preview every day. All right, so now let's take a look at how the S&P did today. Again, 3 days to the upside, near-term line, like a really good end of the day. If you look at the end of the day here, it changed the picture dramatically. We were relatively bearish, lower high and a slightly lower low. And then right about, I don't know, the last couple of hours, 2.5 hours of trading, we just took off and just gradually moved up and up and up and finished above yesterday's high. Still not a new 4-week high point, but finished at the high. So as a result, the near-term line really dropped out. It was actually falling. It jumped into the upper reversal zone, got above the 90th percentile. The intermediate and market sentiment lines are both rising now. So a very, very good sign. What's not as good is the sector rotation. So I dive a little deeper into this in the video. You can see this is what we want to see. This is like, if this were an intraday chart, this would be perfect. This is a 3-month chart. This would be the perfect chart. Everything rising, maybe one sector is not, but everything's rising and these three are rising most. That's the most bullish pattern we'd like to see. That's not what happened today. So if you look at what happened here today, it was healthcare really had the biggest run because of the Trump RX deal that was put out there, and Pfizer getting a deal, and the Eli Lilly as well. You can see we don't have those three sectors outpacing today. So this is not what generally we want to see. And really, if I look at the last 3 days, this going back to the 3-day rally we've been on. Again, utilities, healthcare. Utilities was the best performer until healthcare is today. Materials and industrials are still up there. Like your top 3 sectors are matching the markets, but they're not outpacing all these other cyclical sectors. So it's not what what we want to see there. Breadth also, as a result, has not been very positive. You can see really since starting on the 19th, breadth has been pretty poor. So again, going back to that sector rotation, if I were to take a look at it from the 19th going into this, so once the breadth started to be negative, again, you can see technology great, and energy has been pretty good, but utilities is leading the way here. Healthcare is up here, industrials, and most everything else is negative. So that's what happens when you have negative breadth, and breadth did improve slightly. We did have a slight move higher in the number of stocks above their 50-day moving average. But I break down in today's full market outlook video, kind of really dive into, the intermarket relationships and these breadth indicators and what they might be telling us about, the continuation, the prospects of this really strong move. And I show you some precedents of this move and how bullish we've been for how long we've been. I kind of show you some past precedents that are very similar now that we're closing off the month here. So I'll show you that in the video as well. And then, of course, with the market being bullish today, you would expect the VIX to have gone down, and the VIX actually rallied 1% off of its highs, but finished today higher. The VVIX is still relatively high, not above 100, but relatively high. So we're not quite back up to the strong positive correlation that we typically like to be. So that there might be a little bit of a warning sign from volatility, especially during a seasonally bullish period of time for volatility, with the VIX still above its recent averages. All right, well, that wraps us up for today. Thank you very much for watching. If you want the full version of the Market Outlook video, click this link. That will subscribe you to our foundation tier at just $29 a month. You get access every day to the full Market Outlook video, the trade idea that I put out at the end of that video, the Market Outlook Live, where we put that trade on in real time, and then manage all of our Market Outlook trades in real time. We closed out a couple today. And then also you get access to our Market Outlook Live trade tracker, where we track the results of our trades throughout the year. Again, all for just $29 a month. Cancel at any time. So there's no. You do get, if you go for the yearly contract, you get 2 months for free at $2.99 a year. So that you can cancel that anytime as well, but you get the full year there. But all of that, again, for less than $1.40 a video. I think the annual version is like less than $1.20 a video. So very, very good value for what you're getting out of that. At least according to the trade tracker, with the results that you've been getting on these trades since the beginning of the year. So thank you for watching. Subscribe to our YouTube channel. Hit that thumbs up icon on the video. Comment. Share it with anybody else. Follow me on Twitter for more content between the videos at DavidSettle42. Have a great rest of your night, everybody, and we'll see you all tomorrow.